Okay, final update. Today is the 20th of September and the Finnifty expiry. And I tweeted right in the morning that I'm not interested in trading today. It's just a very bad setup overall because with a massive gap up and an IV crush and still having an event on Wednesday, it just offers really, really bad risk to reward. And especially in that situation, either side move, up move also will hurt you, down move also will hurt you. Up move puts won't lose, calls keep gaining. It just wasn't going to be a good day to trade, which is why I didn't trade at all. So that was a big win in my book because it just would have been such a pain to trade today. Nifty was fairly all right to trade, but this particular Nifty loss of 40,000, this is a positional trade that I was carrying. I had taken this trade. Now this is a long IV trade, it's a double calendar, but there are two things that are bad for this trade, either a big move right on the upside or downside, but that's fine. A move is fine because this is a debit strategy. It's not going to be as bad as if this is an iron condor, and in fact I would be benefited into a little bit of an up move, little bit of a down move. But this is an IV Vega positive strategy. So if IV gets crushed, and right at the open, India VIX was down 5%, IV got completely crushed. What happens is this trade becomes, this blue line comes off down. So it should be visible here. Right, so it goes down. In case IV increases, this blue line actually moves up. Right, if IV moves down, this blue line comes down. So because this trade already lost the hypothesis of IV will stay flat or increase until Wednesday Fed event, that went wrong. I just decided to scrap the trade at about 8 points of loss because it doesn't make sense doing an adjustment after the core hypothesis for the trade itself has gone wrong. Finnifty, I tried to short, margin is sitting around, tried to short 19,000 call at 2.1 rupee with a stop loss of 3 rupees. This 3 rupees hit, actually the entire, this had gone down to almost 1.2 and then it came back up and hit my stop loss at 3. And then I rolled up to 19,100 with a 50 paisa stop loss here. And that more or less just covered the 19,000 call damage. So nothing really, didn't do anything. And this is a period in the market where you kind of, certain days you kind of, are better off not doing anything, you know. So today was a no trade day, and by all standards I'm very happy. I didn't run the bank Nifty algo, I didn't trade Nifty, and if I had, I would have definitely taken a stop loss on both of them. So that's about it. Previously, non-directional trading didn't used to have so many pins here and there. It was fairly simple. You could get away with now to being on point, but right now if you aren't on point, you don't get good entries, you don't get good exits, you don't skip certain days where the risk reward looks bad, then I think at this point it probably has a negative. If you just run non-directional triangle management in premium matching fashion, I think it'd have a negative expected value at this point. So the whatever little bit of a positive expectancy was there in that strategy, I think it's gone now. It's more about your discretion and how you manage to get good entries and good exits, and that's what everything revolves around. So anyway, I hope you had a good trading day, and I will catch you tomorrow. Take care. Bye.